Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market after a pretty wild end of the week, and Friday wasn't that wild. It was a gap down open and not a ton of forceful downside action by the bears. What I look for to try and determine whether it's going to be a significant day in one direction or the other is having the tech sector and the financial sector, the two biggest holdings in the S&P 500, going in the same direction. So every time SPY's at the low of the day and QQQ and XLF, I'm watching those two. And if QQQ hits a low of the day, I can say, okay, if XLF does not hit a new low of the day and join QQQ, then the SPY downside is not going to be extreme and it's going to be limited. So the extreme pullback that we saw in reaction to the FOMC in the afternoon and then the reaction to the Trump tweet, both of those sectors were dumping and hitting new lows at the same time. On Friday, the financial sector hit its low and then held on fairly well while the tech sector remained weaker, but it helped from looking too significantly bearish because there were plenty of these little bounces on the way down, and that, in my opinion, is due to the financial sector, which was holding on. So as we head into next week, we still have a clear hourly downtrend, in my opinion. If we're looking at it on the 5-minute time frame, the end of the day bull move was very short-lived, shorts covering, and then getting knocked right back down. So you could say that the hourly trend did change, where we have the low of Friday, high of the bounce was 290, 289, higher low, holding that low of the day, and then that bull break at the end of the day. But I still need a little bit more proof to be comfortable that at least the short-term weakness is over for now. The 4-hour time frame was a great guide. So what I was looking for on Friday was the 4-hour RSI, which ever since the December dump has bounced off of 27 at the lowest point. So 27, 28, 30, those are the levels we have bounced off of about 4 times now at this point. So I said to myself on Friday, and to members when I was live, just if we break 27, that's the lowest 4-hour RSI that we've seen since the December dump, and that can mean that it's going to be a significant dump similar to what we saw in December. We bounced right from that RSI when we were at the low of this 4-hour candlestick Friday morning. That 4-hour RSI was hitting that 27 level, and that's where we started to bounce from. So that to me means we're bouncing from the same areas we've been bouncing in 2019 multiple times where bulls have bought significant dips. So unless we see an RSI on the 4-hour time frame break below that 27 level convincingly, it's potentially going to be the same buy the dip scenario. If the bears are really going to prove it to us and be a free fall like December, we're going to have to see that RSI level reach levels that we have not seen since that December dump. So the bulls will hope to hold the low of Friday on Monday. That would put a temporary stop to the bleeding. 290.90 is support, and the resistance level to be watching is 294.12. And we also have that level Thursday afternoon. The high of the bounce attempt was 295.96 is what stood out to us. And then first thing pre-market in response to the jobs numbers, 295.60. We couldn't break that level. That helped keep the bears confident Friday morning. IWM, again, same thing. Bulls have to hold that low. And actually, let's look at the longer term perspective on SPY real quick. So weekly time frame. You could be watching an uptrend line. I'm not really one for trend lines to be trading off of, but just as a visual, we can say that if the bulls hold this uptrend, they are keeping full control and just fine and just looking for a higher low. And if we were to lose that uptrend support line, that's when we have the scenario of potentially seeing a weekly head and shoulders pattern develop. The pullback would then be significant down into the 280s or beyond. And then if we do bounce and can't get back to the all-time high, it opens the door to that head and shoulders pattern. So pretty much 290, if we see a significant move under 290, that opens the door for the potential of the weekly uptrend to be at risk. So where we stand right now, bulls are still just fine in my opinion on the weekly time frame, and bulls certainly want to see a green day on Monday. So IWM, same thing, low of Friday, 151.28 will be key. If the bulls can break 153.75, they will shift momentum, and we'll just be looking for daily lower highs to form after these dumps. But like I said, it will at least shift that momentum enough for the bulls to take a breather, or I should say for the bulls to breathe a sigh of relief, putting a stop to this weakness. So if we look at XLF, the bounce was much more significant than QQQ. So I'll be watching QQQ closely on Monday. There was a gap down here at 187.15. That filled. And again, the hourly time frame needs to see a clear trend change. You could say that's a clear trend change. I would say that's still a potential bear flag. If the bulls can break the high of Friday on Monday, it would be notable. 189 is the high that the bulls want to break, and then there's a little gap at 189.23. So XLF, a more significant bounce underway. Looking at that on the hourly time frame, just a nice solid move all through the afternoon. And the bulls in this scenario need to hold the low, and they have a much better chance of holding 27.23, the low of Friday, than the other names that we just looked at do, because the other names have less space to work with. But 27.23 support, bulls need to break 27.74, keeping in mind that we would just be looking for a daily lower high to be set compared to 28.53. If the bulls are really going to completely regain control, they're going to have to bounce, set a lower high, pull back for a higher low, and then change the daily trend, which is going to take multiple days, if not a week, to play out. One step at a time, have to break the high of Friday to get that daily bounce going, and then the higher low and higher high has to come after that. XLF, not a ton of bearish follow through. The 4-hour equilibrium that the bulls were hoping to hold did end up just dropping lower highs and lower lows, but not a whole lot of bear follow through. It only broke support by 12 pennies, so you could make the argument that that's a double bottom. And we need to see the bulls break 91.41 to try and shift momentum on Monday. Weekly consolidation, still no major red flags, but the bulls want to change this daily trend sooner rather than later at this point, because any further pullback on this weekly chart, and that opens up the scenario of the equilibrium as opposed to just a continuation move. XBI, a much more significant bear break. It was the same setup as XLV with the 4-hour tightening range, but an all-out dump on the 4-hour time frame to lower lows and breaking the lowest price of consolidation to this point. 83.33 is a double bottom. That's a key support level, because after that, there's a lack of support immediately nearby. We bounced off that level to the penny, and again, the hourly trend has not changed. We need a convincing break of 84.32 and really need to make it all the way back up to 85.90. Bulls have their work cut out for them to try and hold that support. If that support level breaks, again, the weekly time frame, we'll be looking down at 79.31 as the most important level. And we have this long drawn-out equilibrium that we're keeping an eye on. 79.31 is a very important level for that pattern. And looking at the volatility index, some really nice gains to be had. Again, in the past, these moves last about 4 or 5 days. At most, the biggest moves are the ones that last maybe 2 weeks or so. But just be aware that it is usually short-lived. And if we do see these bounces get some follow-through, we'll be looking for a pullback and a daily higher low to form on the VIX here compared to 1170. And we'll be watching for TVIX and UVXY to potentially give signs of consolidation as well. Just like SPY bulls need to break the high of Friday, the VIX and the volatility instruments want to hold the low of Friday. If that breaks, then daily consolidation will be underway. So it'll be interesting to be watching on Monday as to whether or not the downside action has stopped. QQQ will be on top watch, but so will the financial sector. And we'll check back in after Monday and see if any short-term momentum has shifted. Thanks for tuning in. Have a good rest of your weekend. So looking at some of the perennials that I've planted over the past couple weekends, we've got some figs and some raspberries and blueberries and more raspberries. These figs are a hardy kind, and they'll only end up being about 5 feet tall, more of a bush. And we'll look at some of the bigger ones here in just a second. But the process of what I did is I just dug a hole, and then I took that soil and I would put it in the raised beds. So now the raised beds have a bunch of different colored soil from all over the property with different mineral makeup and all that. And so I would dig the hole, I'd put some manure in it, I'd put some organic fertilizer in there and put the plant in there, and then I would make little moats because we're on a little bit of a slope here. So I made a moat in the back of the plant where water will pool as it comes down the hill, and then in the front of the plant I made a little moat as well, and then I lined it with rocks. So right in under here I've got little rocks all lined up to help catch that water as it moves down the slope. And then I put some cardboard down to cover the grass up, and then covered the cardboard with wood chips on everything except for the blueberries. I used pine needles on the blueberries because as that breaks down into the soil, it adds acidity, and the blueberries like acidic soil. So we'll go look at some other ones that I did. One fig among the ornamentals. We've got this tree starting to flower as well. Still working on the raised beds. Haven't done a whole lot on those as I've been working on the perennial planting. Another couple blueberries here. One of them produces pink berries, which I've never seen before, so that'll be interesting. And this is next to the raspberries and the grapes up there. Over the winter I'm going to cover this grass here that's overgrowing with cardboard and snuff it out, and maybe put strawberries there for next spring. And then I got 3 figs. These are going to be big trees. These are going to be 20 feet high when they fully grow. So more figs, and I used some rocks that I found from around the property, some really cool sandstone and different colors. And I put the bigger rocks, again, I did the same thing with the bigger rocks and the smaller rocks underneath the mulch to catch some of the water on this slope. And some more, did some blueberries, and then here are these small figs that we did a couple weeks ago. They're starting to get their new growth. And more blueberries, and I planted them here as there's a split in the trees, so hopefully they get enough sunlight. And I just found a hawk feather. That's that. Got a cedar swing set up. My buddy Casey helped me put that together. So a spot to hang out in front of the pond and chill with the ducks.